how do we as Forex traders use supply and demand to increase our opportunities in the market and make for better entries and exits when it comes to our trades? In this video, we are going to be talking about supply and demand in the Forex market according to my perspective, or how I use it in my own trading. If you don't already know me, my name is Nick. I've been a Forex trader for about 5 years at the point of making this video. And in this video, I'm going to talk to you guys about one of the most important topics when it comes to technical analysis for me and my trading style. Now, the first thing I want to say before we get into the technicals and talking about supply and demand and how to look for better entries, I do want to invite you guys, of course, to like the video down below, show some support to the channel if you do enjoy my content. I put it out here for free for you guys, and also subscribe to the channel if you want more content like this. With that said, I'm going to also add here that a part of my trading does involve looking for fundamental analysis prior to looking for technical analysis. If you want more information on this, the best place for you to get it is to head over to our website, a1trading.com, and you can find tons of resources about fundamental analysis as well. But today we're going to stick more to the technical side of things, but just know that generally fundamental analysis plays a key component to any trading that I do. So once we have a fundamental direction, assuming that we do, this is where this part comes in, which is basically the technical side of using supply and demand. Now, what is supply and demand in Forex? The simplest way that I can think of using it is that we are looking for areas on the chart in terms of a price area. That price basically respects in terms of a turnaround point. That sounds a little bit confusing, but let me just draw a couple areas that stick out to me right away. Let's look at this area. Let's look at this area. Let's look at this area, and this area. What do we notice about the price action when price came to these extremes? Well, we can notice that price was in a nice little upward trend right there. Price came into this region here and sold off abruptly. Price meandered a little bit, made its way back up to that point, and then what did it do? It actually shot down again. We would call this area a pivot spot on the chart. At least that's what I would call it. It's like a pivot. It's an upwards, a V or an upside down V is the quickest way for me to spot a level of supply or demand. Because what we have here, if this is price action, we know that price in this general area found demand. Obviously, this would be considered demand because buyers wanted to buy it when it came down to that level. Similarly, up here at the top, when price comes up to a key level and it pivots back the other direction, we would call this area supply. We'll put S for supply. So how can we use these concepts to increase our efficiency when talking about entries and exits? Well, let's talk about it. So again, we've identified some levels very quickly just here in our example of points on the chart where price turned around abruptly. What I would do here is this is where I'm going to go ahead and start using these fancy features that tradingview.com has. We can go over to the shapes and go for a rectangle here, and we can just draw this level here. I'm just going to right click it, go to template, and I have one set to supply. It makes it a nice little red color. And what this shows me is that price at this area is considered, at least historically, we're using historical data here, to identify levels where sellers basically came in and pushed price lower. This marks it as a supply zone. Okay, very, very simple. And we're going to talk about how we can use this in our trading in a moment. But I just want to identify some of these levels and how we may be able to use this for our trading going forward. Now, if you watch my live streams, I do them fairly regularly. A lot of times you'll see me marking levels like this. So I'll just find a key pivot level like this, and I'll identify it on my chart. I'll just set it to demand. And then now going forward, I have this level marked. So what I will usually do in the early steps of my technical analysis, again, usually I start with my fundamentals and then I go to my technicals. And one of the major things that I do with my technical analysis is I'm looking for key turnaround zones on the chart and watching for those levels to come back into play. Again, a lot of the stuff in between these major zones, I am not as interested in paying attention to because I'm looking for key levels on the chart where sellers or buyers are most likely to get involved. Okay, let me mark a few more levels and then we will continue on with this conversation. So another thing that I should point out is that when we see a price level doing this sort of V shape or upside down V multiple times, that to me is considered a stronger area of supply or demand. If we see price respecting an area multiple times, we would consider that area a stronger supply level according to at least my definition here, right? So that's what I wanted to point out is, we can quickly draw a bunch of stuff on the chart. It's very quickly to get your thing all messy if you want to. But for me, the ones that I'm paying attention to the most are areas where I see key pivots at least probably 2 times. Again, I just drew this for the sake of example, just because it is such a clear level. But generally, my favorite areas are prices or levels where we see a couple bounces off of. Okay, so from here, what do we do? Well, I think that one thing that's very, very important in my own trading is that I would not be so interested in taking buys in what I would consider a downwards market. So supply and demand aside, if we know that generally the trend dictates that things are most likely headed down here, I am looking to sell supply first and foremost. I am not looking to buy demand. I'm looking more to sell at supply. Okay, I'm going to say that again because for the new traders, that might be a bit confusing. If we're in a roaring upward market, I want to be on the side of the dominant market energy. I want to be looking for long setups. Okay, so that means that if the trend is up, I'm looking for buys. If the trend is down, I'm looking for sells. Well, what do you do to identify a trend? I'm here on the 4-hour chart. I could look at the daily, for example, to see what the trend is. I use a 200 period moving average as a very simple indication of sort of the longer term momentum of a market. You can see that here on the Euro New Zealand, things are very, very bearish, but this works on any chart, any commodity, any, whether you're looking at this S&P 500 or a currency pair. The idea is that, fundamentals aside, if we are just looking at the technical side, the 200 period for me is a pretty good indication of the overall direction of the trend. Okay. So that's with that aside, basically that helps to dictate the overall direction of the trend, which is telling me which way I want to be buying or selling. Again, going back to the beginning of the video, if, the first thing I look for is generally a fundamental bias, but then once we're looking at it from a technical perspective, this is where I'm looking to say, okay, well, if I have a fundamental bias to the downside on Euro New Zealand, which at the time of making this video, I do, then I am looking for pullbacks to supply. And this is really where supply and demand comes into to the focus really with this, because when we're talking about supply and demand, as a seller, I want to be selling at a level of supply. I don't want to be selling here. I don't want to be selling where we currently are. I really do want to try and wait for opportunities to sell at key supply. So perhaps this 1.67 level might be worth looking at for a potential sell. Now, that's not the only thing that I'm going to be looking for. Just because we come into supply does not mean I'm just going to outright sell. If it was that easy, it'd be really nice. But I think that there's probably a little bit more to it. You might want to look for confirmation. Again, there are different strategies that different people prefer. But for me, I am generally looking to identify a direction based on fundamentals and then looking to sell into supply. So in this case, I actually did take a trade right here. Okay, I'm going to pop that up on the screen for you guys to see. This is a trade I took on Euro New Zealand. I sold right at supply here, and I shared this with our premium group. If you're not a part of our private group, you can actually check that out down below in the description as well. If you want to sign up, you get access to all the trades that I share. We do live webinars, there's chat rooms, and all sorts of good stuff. So definitely check that out and use the promo code down below if you would like a discount on that. Anyways, there's my sales pitch for the video. Let's keep going with this concept of supply and demand. If price is pulling back to a key level of supply, this is where I might get interested as a seller. So again, I'm going with the dominant market direction to the downside, and I'm looking to sell at a key level where we have identified past sellers are hanging out. These things combined give me more confidence in the ability to look for a potential seller's rally or downward continuation. Now, if this thing was flipped, if I was actually looking at this from a bullish perspective, I'd be looking for a pullback to, in that case, demand, right? So price may look like something like this, right? Let's say we're at this price and then we start to see a pullback here. Maybe I'm looking to go long at a general area here. Why am I drawing it as an area and not as a strict line? Sometimes you see traders doing something like this, where they just draw a strict line at a level. And although I don't think that that is wrong, for me, I generally think that markets have a little bit of noise built into them. It's not a perfect thing. There's a lot of things moving price around, and technical analysis is not the only thing, right? So there's greed and fear and coming into the markets, and news hitting the floor, right? You've got all these different factors. So generally, I think that zones of supply and demand are a little bit more helpful for my own sort of trading analysis. Okay, so again, if it was flipped, if we were looking for buys, I'm looking to buy into a pullback at a pullback to some sort of level where price has clearly pivoted, right? In this case, price has sold off twice very strongly there, and then we broke through that level. Now, this is the next sort of break and retest concept. I actually have a video on break and retest, so you can check it out. Maybe I'll pop it up here in the top right corner if you're interested in trading the break and retest sort of concept. One of my favorite patterns personally, but in this case, maybe we saw resistance, what was supply, broke out to the upside, and now pulled back and became demand. Okay, so that's one more thing. Now, the next part of this is, how do we use supply and demand? Now we've talked about potential ways to entry. How do we actually use it for stops? How do we use it for take profits? So the quickest way to identify this is, let's say that we took some sort of short sell at this level. Let's say price does trail a little bit higher and ends up getting us into this trade, right? We're selling at supply in this scenario or this example. Where can we use supply and demand to help with our entries? Well, you've technically got some demand here. You can actually see price came down to this level previously. Let me just extend my levels out here. So at the last touch of this area, the 165.5, let's call it, price did get a bounce. We saw price rally off this level here, and we saw it rally off here pretty sharply. Okay, so we've got some relative demand there. Now, again, the overall trend is to the downside though. So I am more interested in selling at resistance, and I'm not as afraid of demand. Let me explain that. When we are in a dominant downtrend, I am assuming that in many cases, the levels of demand here will eventually break and give way to the dominant trend. So as we do pull back to a level of supply here, let's say I do take this sell. I like this trade and I put stops above previous highs. Okay, that may be a way that I look to sell. Now you might say, well, Nick, why don't you put it all the way up here? This increases my stop by quite a bit if I were to do that. So I probably wouldn't do that. I'd probably just be looking to take a trade here. And I'll give another example in a second if this one didn't work out. But I would actually be looking to target the extension to the bottom of this trend. Again, I am a trend trader, so I'm looking to go with the dominant energy, and I am assuming that if I'm getting into a trend, I'm going to try and catch as much of a trend as I possibly can. So as we do pull back to supply here, I might very well be interested in looking to sell this market, but I'm not going to take profit here. I'm not going to cut the trade short because I think that this trend is still dominant. So I'm actually going to target a move all the way back down to the previous low. Again, it's a bit confusing at first because we did mark this area as demand. And I suppose another technique that some traders might use is they might take two small positions. They might split their size in two. Let's say you have a smaller account and you take two trades at 0.01 lots, right? You could set one target. Let's say both of them sold here. You could technically put a target here and a target here. This gives you the chance to do two take profits, right? And sometimes traders will do something like that, right? So they take one trade and they set the target here, stop here, and they set the second trade, sell here, stop here, target two, right? So they put their other target there. That's another technique. There's all sorts of different options. Some traders like that because they like the ability to take a profit quicker and kind of just feel like they've captured a win and then sometimes let the rest of it run. But for me, my personal approach, I actually don't even use a take profit, which is going to really confuse some of you guys out there. I also have a video on trailing stops and why I like trailing stops. But let's say I did take this short and I actually see price start to roll over. In this case, I'm going to let this thing run as much as it wants. If it wants to break through the low and keep going and make another leg lower, then I'm going to try and let it do that because that's my style of trading. This definitely is not for everyone. Not everybody likes to trail stops because it does decrease your win rate in most cases. But for me, it is my style that I really, really like. But either ways, if you're using a target or not, supply and demand levels can be a really, really helpful way to increase sort of your potential target ideas, right? If you do like to put a target on your trade, well, we've got clear demand here and we've got clear demand here. So you could make the argument that, okay, well, if I sell here, all I'm going to do is trade what people would call zone to zone. Right? This is a popular phrase among some traders, is looking for that zone to zone move. So it comes up to a zone, they sell one zone and they're looking for a move down to the next. That sort of concept, if that's something that you like, then by all means, I encourage you to go test it yourself and try things out. I do want to stop and encourage all of you guys here watching right now, take everything that I say on YouTube and everyone else on YouTube with a grain of salt. Instead of copying and just looking for some sort of magical solution, I think what you should do is be open-minded to different ideas, but then go conceptually backtest these ideas, right? So go test these concepts for yourself. If you do have TradingView Pro like I do, you can actually use the replay function and you can go back in time and you can actually test concepts and you can just press play here and let it run. Again, there is a link down below in the description if you want to sign up for TradingView. TradingView is a supporter of our content here on YouTube, which I think is very, very cool. So you can check them out. And if you use that link down below and sign up for a pro version, you'd be helping out the channel. So, but again, great tool for backtesting. If you're serious about your backtesting, highly encourage tradingview.com. Use that replay function. It's only available for pro members. Anyways, that is basically it, you guys. That's what we've got today when we are talking about supply and demand. If you did enjoy this video, I want to encourage you to like it down below. It does help to support the channel, and I do really very much appreciate it. You guys are amazing. Make sure to subscribe to my channel if you want more content like this in the future, and comment your thoughts down below. Have a great rest of your day, and we'll see you back in the next one. Guys, thanks so much for watching this video. If you enjoyed it, please remember to like the video down below, because if you don't, you're statistically 84.72% more likely to blow an account in the next 48 hours. Don't ask me how, don't ask me why, that's just facts. If you enjoyed that video and you want to see more free content here on YouTube, I'll be popping up some videos on the screen now. Go ahead and click anything that looks interesting to you, and thank you so much.